Are you betting on the wrong stock? Most people think they're buying the future. What they're really buying is a chart. They see a 90% gain and assume it shows strength. They read AI headlines and confuse contracts with dominance. They compare AMD to Nvidia as if this is a fair fight. But that thinking misses the point, and it's why most retail portfolios struggle. In this game, coming in second can still make you rich, but only if you know what role you're really betting on. Confuse momentum with moat? You lose. Confuse access with power? It's the same story. Here's the uncomfortable truth no one wants to admit. This market doesn't care who's talking about AI. It cares who controls the flow of compute, software, and profit. AMD showed up. They landed big names. They're present. But there's a difference between being present and owning the building. That's the gap no one's discussing, and that's what this video will reveal. You're buying one of these stocks as if they're interchangeable. You're not just guessing, you're gambling with blindfolds on. Control is not something you split. You either have it or you don't. Right now, Nvidia owns AI infrastructure, not because they got there first, but because they built something no one else can rip out. You're not just looking at hardware, you're looking at a complete system. CUDA owns the developer ecosystem. Nvidia's stack is vertically integrated from chip to model training. Their software lock-in is so deep, customers stay even when they want to leave. This is how Nvidia pulls $31.9 billion in quarterly revenue and keeps 53 cents on every dollar. That's not just scale, that's grip. Now compare that to AMD. They just had their best quarter ever, $9.2 billion in revenue. Solid margins, big AI wins. That's not failure, that's progress. But the gap isn't closing, it's widening. Because AMD's hardware might be catching up, but the moat isn't built. Their ROCm software is improving, but it's years behind. There's no lock-in, no switching cost, and when Nvidia's supply chain catches up, every one of those contracts is back in play. The takeaway: dominance doesn't mean you're first. It means you've made it harder for anyone else to compete. Nvidia isn't just selling chips. They're selling an ecosystem that doesn't let go. Second place still pays, if you know the rules. There's a reason AMD just booked $1.6 billion in data center GPU revenue. It's not luck, it's not hype, it's availability. Nvidia's backlog is miles long. Demand exploded, supply didn't. That left the door wide open, and AMD walked through it. OpenAI signed on. Oracle locked in 50,000 GPUs. IBM, Cisco, Cohere, real names, real deployments. AMD didn't just talk AI. They delivered hardware, on time, at scale, and that matters. But let's not twist the scoreboard. Being second doesn't mean you're losing. It just means you play a different game. Nvidia dominates because they built the system, not just the chips, the whole stack. AMD's chips, they might even win on paper. Higher performance per watt, lower cost per unit. In isolation, they look like a better deal. But production systems aren't isolated. Nvidia's entire platform, CUDA, TensorRT, CUDNN, has been optimized for Nvidia Silicon. Every model, every framework, every enterprise stack is tuned to squeeze speed from Nvidia chips. So when someone swaps in AMD hardware, they find out the hard way. Because sure, you look smart comparing benchmarks, but now the system runs slower, latency goes up, bottlenecks appear, and that shiny new chip turns into a liability. You flexed your spec sheet, now your system just flexed back, and it broke. In bull markets, investors stop caring about profit, but profit never stopped mattering. Nvidia prints money. They're running a 53% net margin. That means they keep more than half of every dollar they bring in. AMD, just over 10%. One keeps half, the other keeps a dime. Now look at free cash flow margins. Nvidia, 41.3%. AMD, 17%. And valuation, Nvidia trades at 45 times earnings. AMD, 107 times. That's not a typo. That's a disconnect. To be clear, AMD isn't falling apart. They just posted $1.5 billion in free cash flow, their best quarter ever. Gross margin jumped back to 52%, which is great. But let's not get carried away. That margin bounce came off a crater. Last quarter, they took an $800 million hit from unsold inventory tied to China export restrictions. Strip that out and you're not growing, you're just resetting. The embedded segment is shrinking. Revenue dropped 8% year over year. Operating income fell 24%. There's no sign of a China rebound. And while both AMD and Nvidia use TSMC, only one of them has real leverage outside of fabrication. Nvidia controls the stack, software, hardware, verticals. They can redirect demand, steer product cycles, and extract premium margins. AMD can't, at least not yet. The margin profile is improving. That's good, but they're still not in Nvidia's league. Not in cash efficiency, not in earnings power, and not in pricing control. You paid 107 times earnings for a company that keeps a dime on the dollar. That's not conviction, that's delusion. You wouldn't pay Tesla prices for a Kia or Hyundai even if it had nice rims. So why are you doing it here? You didn't buy a bargain. You bought a valuation that can't take a punch. The takeaway. AMD's trend line is up, but they're still punching below their valuation. If you're paying for dominance, you need more than one strong quarter. You need a business that can take hits and still generate cash. That's not what AMD is, at least not yet. The face-off. Round by round, no opinions, no excuses. Everyone's got an opinion, but opinions don't win fights. Numbers do. This isn't a fan poll, it's a 6-round cage match, and only one of these companies walks out first. No excuses, no hypotheticals, just the scoreboard. Round 1, net profit margin. Nvidia 53%, AMD 10.3%. One company keeps half, the other keeps a dime. This isn't a contest, it's a clinic. Winner, Nvidia. Round 2, cash return on invested capital. Nvidia 75.1%, AMD 8.8%. This metric tells you who can turn capital into real money. Nvidia prints it, AMD recycles it. Winner, Nvidia. Round 3, valuation math. Nvidia PE ratio 45, AMD PE ratio 107. Let me spell this out. You're paying more than double the price for 1/5 the profit. Winner, Nvidia, and it's not even close. Round 4, AI infrastructure integration. Nvidia owns CUDA, software stack, developer lock-in. AMD, ROCm, improving, but still catching up. Even when AMD wins the chip battle, they lose the system war because AI isn't plug and play. It's ecosystem warfare. Nvidia built the arena. AMD is still buying the tickets. Winner, Nvidia. Round 5, risk versus reward. Nvidia Sharp ratio 1.5. That's solid. AMD Sharp ratio 2.5. Very good and better. From a pure price to risk perspective, AMD stock is delivering stronger upside per unit of volatility. That's not nothing. Winner, AMD on risk adjusted momentum. Round 6, net income growth forecast. AMD 293.8%. Nvidia 57.1%. This is where AMD fires back. Their net income growth forecast is nearly 5 times Nvidia's. That doesn't mean they're stronger today, but it shows how fast they're moving. Winner, AMD on acceleration. The final verdict. Nvidia wins 4 out of 6 rounds, and the ones they win are the ones that build empires. Profit, capital efficiency, platform lock-in, and pricing power. AMD grabs momentum and future growth. That's real, but it comes with risk, volatility, and higher expectations baked in. So unless you know exactly what game you're playing, this scoreboard will humble you. Is AMD worth holding? Let's get this straight. This stock is not for everyone. The bull case and why AMD could keep climbing. AMD is no longer pitching AI, they're shipping it. $1.6 billion in data center GPU revenue this quarter. Signed deals with OpenAI, Oracle, IBM, Cohere, Cisco, and G42. Projected to hit $7 billion in AI GPU sales this year and $42 billion by 2029. Free cash flow just hit a record $1.5 billion. Margins are recovering fast, 52%, which is up from 40%. And ROCm software stack is improving. Nvidia's backlog has opened the door. AMD stepped through it. This isn't hype, this is execution. And if the trend holds, AMD becomes the go-to second source for AI infrastructure, right as demand explodes. Now the bear case and why this could unwind fast. Growth doesn't protect AMD from gravity. AMD still has no software moat. Nvidia owns CUDA, the ecosystem, and the lock-in. Valuation is extreme, 107 times earnings with just 10% net margins. Embedded revenue and operating income are shrinking. They're completely dependent on TSMC, just like Nvidia, but without the leverage. ROCm isn't CUDA. It's catching up, but it's still not sticky. Execution risk is real. One misstep and this stock gets repriced hard. You're not buying stability, you're buying execution, priced for perfection. The bottom line, AMD is a long-term opportunity, but only if you treat it like one. This is not a buy it and forget it stock. This is a high upside option with strict rules. You size it small, you monitor it close, and you don't pretend it's Nvidia just because the benchmarks look good. If you're buying AMD thinking it's the next Nvidia, you're not early. You're wrong. This is a second place rocket ship, not a first place fortress. And that's not a knock. That's the opportunity, because second place still eats, especially when first place is overbooked for the next year. Let's stop dancing around it. You want to know what to actually do with these stocks. Here's the truth. Clean, direct, no apology. Nvidia isn't just winning, they're compounding. Their moat isn't just wide, it's sticky, it's lock-in, and it's still growing. Net margins over 50%, capital efficiency over 70%. CUDA owns the stack, and they're still the first call when it comes to AI infrastructure. Yes, they're priced at a premium, but they earn that premium every single quarter. If you're looking for the AI infrastructure play, Nvidia is still the alpha. Verdict, bullish. First in class, scalable, moated, investable. AMD has momentum. They've signed real contracts. They're grabbing share while Nvidia's overbooked, and that's the window. But let's make something very clear. AMD isn't the starter. Nvidia is. AMD is the backup quarterback who got the call because the starter was already booked solid. And yes, sometimes the backup lights it up. Sometimes they even win the game. But let's stop pretending this is a fair matchup. Nvidia owns the playbook. Nvidia built the stadium. AMD is borrowing cleats. This isn't hate. It's math. And if you're still comparing them like equals, you're not analyzing. You're hallucinating. Treat AMD like a loaded trade, not a foundational position. This isn't where you park wealth. It's where you place bets with strict rules. Small size, defined thesis, watch like a hawk. When the story shifts, you exit clean. Am I bullish on AMD? Yes, but only if you know how to handle volatility without losing your conviction or your account. Nvidia is the MVP. AMD is the opportunist. Both are investable, but only if you understand what game you're playing. If you want durability, moats, software edge, and profit, Nvidia. If you want torque, timing, and momentum-based upside, AMD. If you want both, size them right. Define your time frames and stay honest about what you're holding, because the second you confuse speed for strength, you'll get blindsided. Let me ask you something. How many YouTube channels actually show you how to win with high-risk stocks and without gambling? Steven didn't guess. He followed a system, and this is what happened. 4 trades, 4 wins, all over 90% gains, and he did it in just 3 days. No hype, no stress, just discipline and execution. Then there's Sam. He didn't try to time the market. He didn't overtrade. He sat on his position and watched it grow to a $112,452 profit. That's not luck. That's leverage with control. And if you think those are one-offs, my portfolio is up $2.47 million year to date, which is a 71% gain. That's not from chasing momentum. That's from building the right positions when everyone else was chasing headlines. Inside my Patreon, you get everything I'm looking at. Hot stocks, trade alerts, daily setups, my portfolio, the real moves, my real results. This isn't theory. This is how I actually manage millions of dollars. My Patreon group isn't for everyone, but if you're serious, it's the most profitable dollar you'll spend today. Cancel anytime, no pitch, no pressure, just execution.